Welcome to today's deep dive. Before we jump into today's really incredible story, we just wanted to give a quick shout out to Hui Wang's A History of China series. It's genuinely an indispensable resource if you're interested in understanding, well, one of the world's oldest civilizations. It covers history up to the 5 dynasties and 10 kingdoms period, and you can grab it on Amazon, ebook, or paperback. Seriously, a must read. Okay, so today we're diving into this high stakes drama playing out right now in global AI. It's the pretty astonishing story of Manus, a Chinese AI startup, essentially had to pick up their entire core operation and move it to Singapore. It's a story that really highlights the huge shifts happening in AI, caught between really fierce local competition and these mounting geopolitical pressures. So our mission today is to unpack how these forces basically rewrote Manus's future.
Yeah, it's quite a story. Manus got a lot of attention pretty quickly in China, especially sort of in the wake of DeepSeek. They introduced what they called a general AI agent. And this wasn't just another tool. Most agents did specific things, but Manus was really notable as the first one to handle a whole range of, cool and diverse tasks, and all within this really slick user interface. In AI today, being able to do things like shoot videos and tell stories, that's become a key productive force. Manus really stood out there, kind of like OpenAI or Figure AI in their own domains.
Right, so the cool factor was key. Their genius wasn't maybe the absolute raw AI power, but making it feel smart and easy to use. Because, interestingly, the tech under the hood wasn't necessarily cutting edge, right? They were using Anthropic's Claude model, mostly. Not even the MCP model that was rapidly becoming the benchmark. So their real strength was all in that interface and interaction design, making complex AI stuff feel smooth and, cool in the demos. And that really got people talking, fueled their popularity. So what strikes you most about how they grabbed that initial spotlight?
Well, they definitely had the buzz, like you said, the cool factor. But that initial spark didn't really translate into lasting success in China. The big challenge, the really big issue, was their reliance on U.S. large language models like Claude. Because of the specific regulations in China, they just couldn't legally use those foreign models to launch their service there. So they tried to pivot. They attempted to integrate with Alibaba's model, Tongyi Qianwen, specifically version 2.5. But, and this is critical, it had poor instruction adherence, which is just absolutely vital if you want to chain complex AI tasks together accurately.
Okay. Instruction adherence. So that was like their Achilles heel. It basically broke the AI's usefulness. Like you said, if you tell an AI, go east, and it wanders off west, well, that's a fundamental flaw. But even if they'd fixed that, were they facing an uphill battle anyway because of the competition?
Oh, absolutely.
Because you had these huge Chinese tech firms, Alibaba, ByteDance, Baidu, Minimax, Kimi, Zippo, 360, the list goes on, all rolling out very similar general AI agent products, and often for free.
Exactly. For free. And for Manus, even though they had decent funding, competing against giants offering the same thing at zero cost.
That's clearly impossible.
Right. And that free model really highlights the tough business side of these general AI agents too, doesn't it?
It really does. They burn through massive amounts of tokens. Think of tokens as tiny units of data the AI processes, like parts of words. You pay for every single one.
So it's like paying per word for every single task or chat. Gets expensive fast.
Incredibly expensive. Plus, the results you get from these general agents can often be a bit unpredictable, maybe only partly usable, which makes it really hard to justify charging users a premium price for it.
Yeah. The big guys, they can absorb those token costs, maybe offset them with other services.
Right. But Manus, as a startup buying access, they had to pay for every single token used.
And there's the core problem again. What seems cool when free suddenly looks very different when there's a price tag attached.
Precisely. And that cost factor, it definitely fueled negative feedback for Manus back in China. So you combine that with the brutal free competition, the issues with the business model itself, and it leads us to this really dramatic move they made recently. On July 9th, Manus announced big layoffs in China. They basically shut down their domestic operations and relocated the core team to Singapore.
Yeah, it was quite sudden. Out of about 120 staff, maybe only 30 to 40 core technical people actually made the move.
And now they're talking about new HQs and R&D centers, not just Singapore, but Tokyo, Silicon Valley, and offering some seriously high salaries in Singapore, like $8,000 to $16,000 a month.
That's definitely a way to attract talent, but it also shows the cost base they're dealing with now.
But the main reason for this huge shift, it wasn't just business strategy, was it?
No, not entirely. The main driver seems to have been geopolitical pressure, directly tied to their funding. Manus had just secured a pretty big funding round, $75 million, led by Benchmark, a major U.S. VC firm, valued them at $500 million. But here's the fascinating part, and where it gets really direct. The U.S. Treasury actually reviewed that deal. They looked at it under a new executive order that restricts U.S. investment in China's AI sector.
Wow.
And apparently, the approval for that crucial funding was contingent on Manus not being classified as a Chinese company.
So they literally had to move to secure the money.
That seems to be the implication. It essentially forced the relocation to Singapore for the deal to go through.
That is stark. It wasn't just about finding a better market. It was about survival, about keeping the lights on through funding. How common is that for geopolitics to directly force a company like this to completely relocate just to get investment?
It's becoming more common, unfortunately.
And beyond just keeping Benchmark happy, moving to Singapore solves other problems, too.
Well, definitely. Now they can legally use those U.S. AI models like OpenAI and Anthropic.
Yeah.
That solves their core model access problem and lets them actually offer compliance services overseas, maybe customized ones.
And presumably it gets them out of that brutal free-for-all competition inside China.
Exactly. That market for general AI agents seems effectively closed off to smaller players now, unless they have a radically different sustainable model, which is hard to see right now.
Okay, so Singapore offers solutions, but it must bring new headaches too.
Absolutely. Singapore brings fresh challenges. I mean, it raises this big question. Can they really build a strong, independent R&D hub there with those high costs?
Right, those salaries you mentioned.
Yeah, the salaries, the cost of living, it's incredibly expensive. Or will they end up maybe quietly outsourcing some of the heavy lifting, the development work, back to engineers in China, while keeping Singapore as, the shiny front office for management, for clients, for investors? That's a real possibility people are discussing.
So this move signals a whole new strategy then.
Yeah.
Singapore isn't about winning the general AI race anymore, maybe.
Probably not. It seems more likely that Singapore's about stabilizing that investment they just got.
Okay.
Converting their brand name, which they did build, into actual paying clients outside China. And figuring out a path to profit, maybe through things like compute centers or other related operations for these new markets.
And focusing maybe on more niche things like vertical AI agents.
Exactly. Developing vertical, customized AI agents, perhaps specifically tailored for markets like Japan and Southeast Asia. That seems more plausible now.
Less about the general agent dream, more about specific, profitable applications.
And maybe, down the line, even listing on the Singapore Stock Exchange, aiming for stable, long-term growth in a different ecosystem.
When you step back and look at the bigger picture, what does this Manus saga really tell us?
Well, if we connect this to the broader landscape, it clearly shows how geopolitics are just fundamentally reshaping the AI industry right now, as we speak. And Manus isn't some isolated case. We're hearing about other well-known Chinese AI firms, companies like Hagen, Lovart, Gensmark, reportedly facing similar pressures, being forced to relocate or set up significant foreign entities because of these U.S. investment conditions and the broader geopolitical climate.
So is it fair to say that the old pathway is closing? U.S. venture capital flows into a hot Chinese tech startup.
Yeah.
They grow rapidly, and then they aim for that big IPO in the U.S. on the NASDAQ or NYSE. Is that path now blocked?
It certainly seems much, much harder, perhaps effectively closed for sensitive sectors like AI. It forces these Chinese AI startups into a really tough choice.
Yeah.
They either have to look towards listing in Hong Kong, which has its own complexities, or they do what Manus did. They relocate entirely, maybe to Singapore, maybe even try to become a U.S. company somehow.
It's kind of ironic, isn't it? So many top AI developers, researchers, just pure talent in the field globally are Chinese. But these new U.S. policies are effectively drawing a line, as the source material put it.
Yeah, a very clear line.
So we should probably expect to hear more stories like Manus's in the near future.
I think that's almost certain. This trend seems likely to continue.
Which leaves us with a pretty big question to think about for you listening. Given this global shift, these lines being drawn, how might the actual nature of AI innovation change? Its speed, where the focus goes, who ultimately benefits. Could all that be fundamentally altered by these geopolitical forces? Something to definitely consider as AI keeps evolving at this incredible pace. Well, that wraps up today's deep dive. Thanks so much for tuning in.